Good morning, everyone. This is Brian Wagner, Chief Architect of Prodigio RTS. Welcome and thank you for joining our chat today, where we're going to talk about Prodigio and how you can use its powerful scanning and visualization tools to find opportunities in the market and see things based on technical analysis and fundamental values that you probably can't find just by searching for them yourselves. Prodigio is the automated trading platform offered exclusively by thinkorswim and TD Ameritrade. In order to get Prodigio, you need to request Prodigio activation by sending an email into support@thinkorswim.com. Give the subject line Prodigio activation, send them your user ID, and they will get you activated right away. Once you have activation, you'll get a link in your thinkorswim trading application. Under the Tools tab, you press our Prodigio icon, and it will launch Prodigio as a separate application. Prodigio, the automated trading tool system, it is wired directly in with your thinkorswim trading account, and all of the trading that you do on Prodigio is linked to your thinkorswim account and vice versa. So you can use it as a complete augmentary system in order to take advantage of very powerful robotic and semi-automated trade scanning and idea generation tools. Follow us on Twitter, twitter.com/wizardlab. We're growing in numbers by the day, so please, join us, hit us up on Twitter. We send announcements about the platform. We also talk about when releases are coming. And join us on the web, www.prodigiorts.net. Every one of these videos are archived each week. We're here in the Prodigio chat every week, every Wednesday, 11 o'clock Central, 12 o'clock Eastern. And if you are looking for support about Prodigio or need to ask some questions, or you want to know, how do I build a strategy, how do I tweak this, do you think this is a good idea? Join us in the chat room during the week. And we usually have a presence here to answer some questions. That's the Prodigio chat. And also check out our forum on the web, www.prodigiorts.net. Today we're going to talk about scanning, trade idea generation, finding ideas in the market. And Prodigio, its purpose was built primarily on finding the opportunities. There's a significant advantage to being able to take a robotic system, a large computer server, and lots of technical analysis-driven algorithms. Have them perform scans on all of this market data. You might be scanning as much as, say, 50,000 instruments, and you might understand maybe less than 1% of those instruments. Maybe some of those are derivative instruments, etc., things that are still tradable, yet things that still present opportunities for you to perform, say, swing-based trading or intraday-based trading. You can also take advantage of scanning systems for price opportunities. In other words, if you are managing a portfolio, an investment portfolio, and if you want to find optimal entry points in a position, in other words, you need to rebalance your portfolio, you're going to liquidate some shares of some stocks, and you're going to take new positions on long or short in another. You can use automated trading tools and scanning functions to find the best entry points. And history tends to repeat itself, so with enough study of not only the market in general, but the unique behavior of various instruments, you can find optimal points of entry. Now, there's been a lot of very interesting things that have been happening in the market lately, and that's what really makes it a really good segue into this chat, because we're going to talk about why do things happen in a technical analysis driven system. Why do things fire signals? If this is your first time looking at Prodigio, you may be less familiar with the automated trading systems that people have built. You would have heard about this from a lot of people, and even another significant portion of you would have built systems yourselves, even in prior setups, especially with the introduction of online-based trading, which is really a new thing, by the way. This was far less prevalent in the 90s than it has been in the last decade. Then it's going. It's really taking off, especially with all these smartphones and everything that we've got integrated into the web today. As the market becomes more technically driven, there are more technical players introduced into the market. And so if you go back to, say, the 70s and even the 80s, the market was a different creature. Everything was done based on the motives of human interaction with the market. And of course, you have hedge funds, and you have big players, you have small players, you have the mom and pop investors, you have all these players. But back then it was much significantly more human oriented, and that manifests itself in the data. Now of course you have economics and all this other kind of stuff come into play, but technical analysis, which was really new back then and pioneered by traders such as John Bollinger, John Ehlers more recently, a couple of Wells Wilder, that's the name I'm looking for. He was probably one of the biggest ones that, if you were going to give the name father of modern technical analysis, perhaps it's Wells Wilder. That's up for debate. But back then, as these tools were being developed, they were used in different ways, and they were perhaps able to see things either more or less accurately. But the point is that the market changes behavior, and as technology is progressing, there is a more and more significant computer-driven and technical analysis-driven component to the nature of the markets. And you're always going to have gap plays, and those gap plays, in my opinion, would be based on things such as earnings, which we just had, news on a stock, significant events in the fundamental of the companies. However, these events also manifest themselves in the technical analysis. And what we try to do each week in these chats is talk a little bit about how you can take advantage of that. One of the things that is going to happen when you break out, you're going to have price happen significantly outside of a ranged band. So what I can do, just as a quick little demo here, we talked significantly about Bollinger Bands last week and how you can take advantage of them. Bollinger Bands form a natural channel about the price action, which shows you where the price is relative to its natural trading range. This band, the middle line, is an average, and the band is based off of volatility. So it's kind of like, by nature of the statistics, where does the price fall? And it oscillates about that range. Sometimes it breaks out of the band. But when you have a gap, for example, this gap on QCOR may have been driven by news, it may have been driven by the earnings, etc. Lots of different things could have contributed to this very significant gap up in price, and it's really taking off right now. But you can identify these situations if you know some very basic technical analysis. And we try to kind of talk about what you can use. We try to talk about the differences between volatility, between price versus average, oscillators, volume studies, etc. But if I take this Bollinger Band and I give it a significant offset, let's say even just 3 periods, I'll give it a 3-period offset, that's actually going to shift the band over to the right. And the reason why it shifts to the right is because the band is looking backwards into the past. Right? So in other words, if I look at right now, by shifting the Bollinger Band 3 periods to the right, this Bollinger Band up value, 35.29, that's what the value was 3 periods into the past. I just shifted it right, and the reason why I shifted it to the right is because I want to look at the past right now. And that's how you have to think about that. But if I do that, look at what happened here. On this gap, the open of the day is significantly above that upper Bollinger Band. It's not just above it. See, over here it breaks out above it, and it's above it, but this is significantly above it. This is quite possibly even 3 Bollinger Bands above. And I'm just going to, just so I make sure I hit it, I'm going to set this at, say, 2.6, just to make sure I get something in range here. And so I'm at 2.6, right? And the open of this bar is even above 2.6 Bollinger Bands away. And that's extremely significant. The idea behind a Bollinger Band is that it's a quasi-normalized study. Look, it even opens above 3 standard deviations. That is highly, highly significant. And if you get an open above a shifted Bollinger Band, that's a very good way to identify gaps. So you can use this technical analysis to very easily find these situations. And what you can do is create systems that run these scans and present to you the aggregation of results. Right? So we're going to focus less on the how do I use the TA in this video. We usually, specifically talk about technical analysis studies in specific chats. Last week we talked a lot about Bollinger Bands. You can always go back to the web, check out the video archive, and you can hear the discussion about Bollinger Bands. It actually gets a little sophisticated, but I try to keep it as simple as possible so it's easy to follow. But the idea is you use this technical analysis and you aggregate the signals using some kind of scheme. And what I'm going to talk to you about today is how you aggregate these signals in Prodigio, the tools that are available today, and I'm going to give you a hint as to the build that we're currently working on, which is going to allow you to take advantage of even more aggregation of scanning signals. Now, scanning signals, I consider this trade idea generation. Right? Oh, and by the way, if you're having trouble with the sound, you might want to try closing the window and opening it up again. Okay, good. It says it's coming good through very well on my end. Okay, so just try that if you're hiccuping on sound. Scans themselves. I consider scans to be trade idea generation. What happens when you're running a scan is you're using the technical analysis and it's automatically calculating everything for you and bringing to the front all of the ideas as they stream in real time. It is a form of semi-automation. It's semi-automation because I'm looking at TradeOptics right now. As signals come in for scans that I have set up into TradeOptics, it presents me with the real-time queue of signals. And when I get something, I can click on the Trade Now button. It's going to show me the signal on the chart. Right? So the automated system did all the work to find this signal. And I consider this semi-automated trading because I can now analyze this signal and decide if whether or not I want to put a position onto this signal. So I've got a long signal here on this very basic strategy. I have a couple strategies running. These strategies are very simple in nature and they're designed to give me a lot of results so I can talk about these chats. But your signals are going to be either more frequent or less frequent depending on how you want to use the system. Do I want to see a lot of signals? Do I want to see few signals with choice conditions? But this is a semi-automated system because what I can do now in Prodigio, now that I've loaded this signal, which was a long signal, I can study this and I can decide, do I want to get in position right away or do I want to work this a little bit more? Do I want to wait for confirmation? Do I want to maybe pass on this signal? Maybe I don't like this signal. Maybe it's just not significant enough and I have too much of a bearish trend. I wouldn't want to go long. I can pass on this signal and I can look at the next one. So here's the latest one, MET, on this EMA cross that I came in. I have some significant uptrend and support. Maybe I want to go long on this system. So, I changed my order type. I send it in as market, and I filled, going in at market. This is a semi-automated system. And what's beautiful about this setup is that you can leverage all of the scanning ability of Prodigio and Wizard Lab, which is a server-oriented system, mind you. Everything that you work with on the client application publishes the strategy to the server so that you have a minimal amount of latency between when you find the signals and how they are managed or executed. So optics is a way that you can find signals, but getting back to the more general approach of aggregation. we're going to get back to TradeOptics and we're going to talk about how this is tied in with WizardLab. But let's go back to TradeVision and talk about some of the things TradeVision does. And we'll segue this into how it works with TradeOptics and the new build which bridges the gap between the two. In TradeVision you have a couple tools, and if you scroll down I've expanded these scans out for you. These are scans. What happens is we have intelligence on the servers running behind the scenes, and this intelligence drives what you see as a result in the scan. The scan is an aggregation of the studies that we are running, and on the top level you have the most basic aggregation that you can think of. Under TradeVision I've got my market watch, and this is a standard market watch. You've seen these everywhere. It's advancers and decliners, the top movers and the top decliners. Now what's very interesting, especially if you look under the hood of all these setups, I mean you can find these out on the web, you can go into TOS itself, they have their own advancers and decliners. And what's very interesting is that every one of these lists is driven by condition. Right? And this is the point I need to stress here. There are conditions behind the list that's presented to you. And the reason why there's conditions is because the market is very, very large. There's a lot of unique and independent securities that are traded. And there's a lot of pink sheets, penny stocks, and bulletin boards. All of these signals, if you consider these as a whole, do not fit in the same category together. Right? And this is important. If you take a pink sheet stock, and let's say that pink sheet is trading at 1 penny per share, the moment someone buys that stock for 2 pennies per share, you have a 100% move in that stock. Now, that stock may only be trading, say, 3 times a day, right? However, the percent movement, if it went from 1 penny per share to 2 pennies per share, that's a 100% move, which would trump this move on LNG. Now LNG is a much more attractive stock to be looking at today because it says we've got a 51.63% move. We have significant volume, 21 million shares. And if I load it, this is a significant happening on this stock. Again, it's at $9 per share, but even yesterday when it was trading at closer to $6 per share, this is still in a different class than that pink sheet stock that was trading at 1 penny per share, maybe 3 times a day. Now, these still might be considered pink sheets or whatever these are. Now, I don't think this is. However, there are different classes of securities by virtue of the way that they're traded and the interest in the market. Right? We talk more about there being a technical interest, computers being involved. Well, the computers and the algorithms that these are based on, these are your competitors in the market, and you don't have to beat these systems, right? And there's all these black box systems that are running in New York and etc. And there's statistical arbitrage hedge funds. You don't have to fight these systems. You can work with these systems as long as you understand what they are doing, right? And so of course, you do have players in the market that can possibly move markets. I believe that that's, a possibility. I don't think that happens all the time, but when that happens, you can kind of ride the wave, etc. As long as you understand what's happening, that doesn't matter anymore. And so no matter what this stock is classified as, right? If it's a regularly traded stock, and when I say pink sheet, I talk about there's certain stocks which are considered pink sheets, bulletin boards. They're stocks that are either, I think there's restrictions on them. There's probably some trading restrictions. Usually they're for startups, for new companies. A lot of people call them penny stocks. And my terminology could be a little bit off, but they're basically stocks that are traded less frequently and at much lower prices. And that part, is guaranteed because that's what shows up in the technical analysis. And that's what you need to focus on for scanning systems, the technical analysis. When I look at TradeVision, this list is generated based on conditions. And those conditions in this current build of Prodigio, they're kind of abstracted away from you. And I don't have the absolute numbers, but I believe the conditions are the average daily volume on the stock. It has to be above 400,000 shares, and that's an average. So an average of 400,000 shares traded daily. I believe there's a minimum price requirement based on average. Now, I'm not 100% sure. I mean, we have a symbol in here which is $1.38, and we have a symbol in here which is $133. But the point is that in the list of advancers and decliners, there are conditions which basically throw out things that I'm not interested in. Right? I want to make money by trading this stock. I want to find optimal entry and exit points. I want to know where the interest is in the market. Right? So what these scans do is there's intelligence that adds conditions which breaks the stocks down for you and tries to separate things that I would want to be interested in and things that I would not want to be interested in. Well, here's one other example. MF right here. Right? This has a 26% down move on the day, and it's been trading 87.7 million shares. What happens on stocks that trade this much, they tend to have a more continuous pattern. You see, this is some beautiful activity on MF. This has been going down, but it went down in a very continual motion. You know, there's some hammers and inverted hammers in these candlesticks, but the general movement is highly continuous. I like trading stocks that are highly continuous because there's less randomness in the movement of the stock. If this starts going down, I can short the stock and feel rather comfortable that it will continue going down. If it reverses its fundamental trend, I can go long and feel comfortable that it's going to continue that until the direction changes. This tends to happen on stocks that are traded at much higher volume. So examples of things that are pretty much guaranteed to have high volume are the ETFs. The ETFs are the equity traded funds, and MF has been traded a lot today. You'll notice that the average volume is up. These bars are much higher than it was yesterday. But if I look at, see, these are in the millions. If I look at, say, the Qs, which is the NASDAQ ETF, typically on average this is going to be traded a lot, and this has been trading in the millions as well, but you can pretty much expect that to be almost every day. If I pull it out to the daily charts, you'll get a much better example. You see the range of this axis. It goes anywhere between 50 million to 100 million, sometimes up to 200 million shares a day. It's very frequently traded, and these are the conditions that you want control of in your scans. Right? So the note about TradeVision is that in this build, it presents to you an aggregation based on some technical analysis, and that technical analysis is trying to give you, quite simply, things that have fairly high volume and fairly high movement, and it presents it to you in this table. Now that's what MarketWatch does currently. Now, as I said, I'll be alluding to the next build that we're working on. The next build gives you control over those conditions. And that control is based on a large collection of technical and fundamental analysis. One of the things we've been working very hard on in this build is giving you a complete spectrum of the market fundamentals. Those fundamentals you will be able to take advantage of in Wizard Lab. Wizard Lab is what lets you create strategies that fire signals. So I was talking about TradeOptics. I was showing you these signals. Wizard Lab lets you create and save a strategy that when I publish it in TradeOptics, it'll start showing me the signals in real time as they come in. Well, the other side of that is the scan. I just want to know what's the current state of the market according to the conditions. There are two different ways to aggregate results. This way is the things that satisfy my conditions right now, and TradeOptics gives me the signals as they come in, as everything is changing. So this is a tabular display. You can think of this as a spreadsheet, and the optics you must think of as a queue. Things come in from the top and they trickle down to the bottom. It's almost like a ticker of signals based on your strategies. Well, in TradeVision, Market Watch is based on those things, percent move and average volume requirements. In this next build, we have an elaborate scanning system. This scanning system gives you control over these tables in a way such that you can select your conditions, and everything happens in real time. So when you check things off and you uncheck things, it's going to modify your table, and you can use it to drill down or drill up. One of the things about this Market Watch is it's a great, nice, concise display, and it's a display that you're still going to have in the new build. However, I can't say widen my search conditions. So in other words, I have a volume requirement right now running on this scan, and it's 400,000. What if I want to widen my results? And what if I want to say, well, why don't you let things go in that have only 200,000 average volume daily? That would actually give me more results, and it would widen this out. That's what the next build allows you to do, to select based on your scanning conditions what things you want to be presented to you in the scan. And so that's what Advancers and Decliners does right now, and that's where it's headed. And this is hot as well. Just like on TradeOptics, I could load, and I've been doing this, but you can load these in, and you're actually hardwired ready to go to trade this symbol should you decide to elect what to do on this symbol. So getting back to TradeVision, this is the basic scan. If I collapse this, right, and these are always collapsible and expandable, you have another significant trading system, which is the pivots. Now, pivots is a very elaborate build, and this is something that you need to incorporate in your trading, especially if you're a shadow trader listener. I know they talk about the pivots, and they go many levels beyond what I can explain personally about pivots. But the fundamental idea behind pivots is that they're an extremely important part of your trading, and I want to talk about this just for a little bit, just so you know what this system is doing. So let me click on the cues right here, and it's going to show me today's pivots on the cues. And let me actually pull up a 15-minute chart so we can get an idea for what the behavior is. I'm going to double click the tab. I'm going to shrink the volume a little bit, and now I've got a nice display where I can see my pivots. Pivots are significant thresholds in price activity. Last week we talked a lot about the Bollinger Bands themselves. That's one way of finding the price channel. I mean, it's one way based on some statistics, and it is very basic statistics of looking at the movement of price within its range. Pivots has a similar concept. You're trying to classify the movement of the price with respect to pivotal values within price movement. Now, these pivotal values, meaning they're extremely significant, they are based on the prior day's trading activity. And pivots look at the entire range of the prior day's trading. So if I look back in time, the open of yesterday, it happened here. Now I'm going to put some drawings up on here so you can get an idea for this. Horizontal line. I'm going to put this here, and I'm going to put another horizontal drawing at the low. So it's right about there, more or less. You can right click and you can kind of modify these. And I like to make them thicker. It all depends on what you're trying to do. Sometimes thin is extremely good because it's less intrusive. Other times thick is good because you want it to show up very thick. It all depends on what you want. And I should make this the same color, yellow. Right? So I've got two bands, and actually I want to change this color because it conflicts with my pivot point. I'm going to make these actually a blue. And that'll stand out a little bit better. The pivots are based on the range of the prior day trading, and there's formulas involved in these pivots. Right now I'm looking at the shadow trader pivot. They have their own definition, which is a very standard definition of the pivots. You can find that definition on shadowtrader.net under the glossary. So you could actually set up your own spreadsheet if you want to control or archive these pivots. But the pivot point is generally, I believe this is centered at the typical price which is the high, the low, and the close divided by 3. I think it's generally there. It represents kind of your median range. And what happens is for the next day of trading, the price action is going to move relative to yesterday's trading. And this is especially true for high volume stocks. Now, things are always going to happen. There's going to be gap plays, etc. But what the pivots do is they give you reasonable levels of support and resistance, and I'll explain support and resistance, with respect to naturally occurring phenomenon in the market. Right? So a market is defined by bulls and bears. It's defined by people buying and people selling. Also, the rate of interest in buying versus the rate of interest in selling is skewed. It's not symmetrical. And this is probably where the pivot points really shine out. When people buy positions, in 2011 and probably for the next foreseeable future, there's still people who are interested in portfolio management, right? And what do you do when you manage a portfolio? You're investing in a company, right? So you acquire ownership in the company, you buy, and that purchase becomes a position in a portfolio. So people manage the portfolio, especially if you have an IRA account, in hopes that as the company grows, the value of those stocks grow. And I was kind of talking about some thoughts I had about Apple prior to this chat. It's such a great company, and they have really built themselves up over the years. If you had bought Apple back even 4 years ago when it was trading at $70 a share, you would have gained a significant return on your investment in the current value of those shares, because it's, I don't even know what it's at, but it's above 300. I don't know, it's dancing around 400 right now. I mean, that's a significant return. Because of that, support behaves differently than resistance. Support is a significant level which defines price action. It'll be very difficult for price to move through support or through resistance. What that means is that it's a way of expressing the fact that the value of a stock typically does not go to zero overnight. It's extremely rare and probably has never happened. I mean, maybe I'm wrong about that, but I would imagine it's never happened, that a stock goes from $50 a share to $0 a share overnight. And the reason is because there's always some value to a company. And I always give this example. I always give the example that if you take a corporation, if the corporation has extremely bad news on it and nobody wants to have anything to do with the corporation, someone is still going to purchase their office furniture. Someone is still going to purchase their assets, their real estate space, whether it's by selling ownership of land or buildings, etc. There are still going to be certain tangible assets of a company. It's still going to be worth something. And a lot of the trading we do is based on speculated worth. Right? A lot of these really tiny movements is based on speculations and natural phenomenon in the market. Support gives you a threshold for which, as price continues to push into support, it becomes harder and harder to go lower and lower into support. That's exactly what happened in even the broad market here. It was going down, but there's still value in the market, and this push, it did not survive dipping down below the third support line. Right? So there's interest in people buying low, in acquiring, to the point where that interest was enough in the market, or the economics was enough to cause a small reversal, and it wanted, the nature of the stock wanted to get back above that S2. Right now it's still kind of bearish on the day, so this is probably going to dance between S1 and S2, but pivots are calculations that naturally manifest themselves in the market, and you have people studying pivots. A significant number of people studying pivots in such a way that it almost becomes a self-fulfilling prophecy. So you have these patterns, and it's just like birds that migrate. you have these patterns of migration, and they generally follow what they do from year to year, and the birds follow each other. In the same way, our trading activity, it establishes itself based on our patterns, and the more people trading off of pivots, the more the price movement and price action will manifest themselves in that movement. It's never going to be perfect because there are too many forces at play, but pivots are wildly popular and their popularity is only increasing, and you can use that as an edge in your trading. Now, I was talking about support. Resistance is just the opposite. If today was an up day, based on the prior day's action, it would be harder and harder for price to keep climbing above this third resistance point. And that makes sense even just by visually looking at the chart, especially on the Qs. If it closed yesterday at somewhere around, what was this value? Somewhere around 57.35. If it closed somewhere around there, it would be very hard for the Qs to gain almost $3 and surpass this third resistance point. That would be extremely difficult. It could happen, but your probability of that happening becomes less and less. And if you're looking for optimizing your entry points, you can use these to your advantage. Now, let's get back to scanning. In TradeVision, we've got key points, and these scan the select array of symbols for the pivot conditions. Remember, pivots are nothing more than conditions of technical analysis. It's a study, it's calculated, and in fact, if I go to Wizard Lab, which has all of my tools of technical analysis, I was talking about Bollinger Bands before. The way you work with the rule builder in Wizard Lab is I drag out Bollinger Band, and I use this in a canvas to define how the logic should create signals. Pivots are here as well, and we have shadow trader pivots. Before I was talking about R1 and R2. If I want to create a rule that uses the range of R1 and R2, I can use this in a Wizard Lab rule. And we're not going to focus on building rules today. You can check out our prior chat last week about Bollinger Bands, where we talk in depth about how to build the rules on Bollinger Bands. But you can build a system that scans for pivot points and presents information to you in a way such that you can aggregate these signals. And that is what TradeVision is doing with key pivots. And like the Market Watch, this is a simple system. It's doing nothing but scanning for R3, R2, R1. Right? Remember, these are just further away. R3 is the farthest away. R2 gets closer. R1 gets closer. PP is the pivot point. And that's kind of like your median ground. You know, you can expect price to generally be moving or about the pivot point. And as I will explain, it manifests itself in these signals. There's subtle signals on this chart I'm going to talk about. You've got S1, S2, and S3. These are scanning and presenting the aggregation of those pivot points to you in this tabular format. Key pivots we've built out of the box, so it always shows you the items that are really significant. And for example, I talk about the ETFs a lot. There's a lot of ETFs in here, like the Qs and the Diamonds, which is for Dow Jones, and the S&P 500 Spiders. These are extremely significant, so we present these to you out of the box. You can always go into My Pivots, and you can type in symbols as you find them. So we were looking at MF earlier today, and here's the pivots on MF. You get a matrix with the values, but what's most important about this view is the subtle rendering that happens inside of the table. And that's why pivots is extremely pivotal. Bad joke. So what we do is, and remember, this is not going away. This is going to be here forever in the upcoming builds. What the table does is it highlights to you when certain events occur versus the pivot points. And I want to explain this system really quick so you get an idea. We were looking at the Qs before, right? And I've got the Qs up with my pivot points. What happens is the price moves with respect to these pivots. The pivots are fixed with respect to the day. If you use pivots in Wizard Lab, in order to get pivots on the chart, by the way, this is a tip. You guys should really take this to heart if you're going to build pivots in a Wizard Lab rule. Use daily OHLCs and make sure your signal has forming bar off. You need these two in order to match the pivots on the chart. Now, this is kind of an aside, right? But especially for you guys who have been using the system for a while. You've got to think of Wizard Lab as a calculator. Wizard Lab lets you do anything. And as such, it's going to be very specific on the results that it gives you back. And it has to be, right? If I have a calculator, and if I type in 3 plus 3, that calculator has to tell me the answer is 6 every single time, or else people are going to get really confused. And it can't deviate from that. It really needs to be consistent every time. As such, the Wizard Lab Rule Builder, just like a scripting engine, is a system that allows you to specify rules that must be the same every single time. Right? So yes, of course, these output values, right, they always have to be the same, and the pivots is going to output the pivot number, the value at R1. Well, two very important things is that this interval actually allows you to select how you want to calculate the pivots. And if you become an extremely sophisticated pivots trader, you can create 15-minute pivots. The system does not prevent you from doing that. However, if you are using pivots in the traditional sense, and probably the manner which has the most statistical significance with respect to the price action on the market, you probably always want this to be at daily, because that's going to give you one value every day. And the other thing you want to be careful about is turn off forming bar. If you turn forming bar on, that's going to update your pivot values for the current day. And that's probably not what you want. See, when I show these pivots on the chart, these pivots were calculated based on this day. They're actually the pivot values. We draw them today, but they're calculated based on the ranges of the prior day. Right? How do I get this pivot point? I take the high of the prior day, the low, the close, add them up, and I divide them by 3, and I get this value. This pivot point value is not influenced in any way by the price action of today. It stays fixed the entire day. And make sure you understand that completely, and you can use Wizard Lab to create strategies based on pivots, and you'll have no problem using them. Remember, you can always use 5-second OHLCs in the Wizard Lab to get very rapid signals intraday. So again, to use pivots in Wizard Lab, daily OHLCs and forming bar off. Getting back to the scanning system, what happens when price action moves about the pivots, we actually mark if they have been hit or not on the day. Right? And so when I look at this table, you see these, they're very faint and they may not be showing up on your display through the broadcast, but we highlight these with a blue border. And the reason why we use a blue border is because we also use a yellow border. And this is what these mean. The yellow border will blink if price gets close to the pivot. And we have a behind-the-scenes algorithm that determines how the blinking should occur. And it's a reasonable percentage. It's something like 0.5% or something like that. If the price action gets close to this S1 and it hasn't broken through it yet, it's going to start to blink. It blinks to tell you, hey, the price is getting close to this pivot. You might want to take an action now. Right? So you might want to liquidate positions, find optimal entry points, etc. But they'll start blinking as they approach the support and resistance points. If the price breaches any one of these points, it will highlight the sell with a blue border to give you a very subtle indication that it crossed here. Right? And so that could become important if you're looking at everything at a glance and you want to say, well, how has the changes in price, have they met extreme conditions or not? And you can interpret these according to how, say, a shadow trader interprets these. On RTH, it breached S3. If it breaches S3, you might want to consider that it's really not going to go much lower anymore, and you might want to consider this a reversal play. However, there's a bearish trend, so maybe not. All depends on your trading strategy, but the scan is a tool to present this in a visual manner to give you the support and resistance points and to mark it up a little bit to present a view that you can tie in directly with charts and trade based on the pivots. And especially if you're trading during the day, you can have the Shadow Trader broadcast on, and they're going to present a lot of this information to you in real time. So you can think of them as, you know, another outsourcing mechanism for trade idea generation, and those guys are fantastic. So especially if you're not listening to them, you've got to listen to them, because that's, to be honest, it's probably the best real-time broadcast, especially for technical analysis, that I've come across myself. So you've definitely got to get in with the Shadow Traders. One last thing is that these pivots themselves, there's different flavors of pivots. And we have Shadow Trader pivots, Camarilla's pivots, and Woody's pivots. They all use their own algorithm, and they give you different results. So you can toggle between those. So that's what you have under TradeVision. And the scanning system that we are building gives you TradeVision, but to the nth degree with more features. It allows you to choose these scanning conditions, and it ties it in with the robotic trading and, of course, TradeOptics. So everything that I'm saying is happening behind the scenes. You will now have control over, but you also have control over it with the fundamentals and the technical analysis, which leads us back into TradeOptics. Your other TradeOptics, your other visual scanning component of the system is TradeOptics. And the idea behind TradeOptics, it actually came later. Prodigio was designed as a fully robotic trading system. It is a pioneering development. The engineering has been focused on some very key and critical functional requirements that we believe are not available anywhere else on the market, save for maybe highly proprietary black box systems running in co-locations by very lucrative hedge funds that don't give access to the retail market. This is not a black box, but it gives you powerful robotic and systematic trading tools which are server-centric, minimizing latency, and gives you a way to publish and unpublish and manipulate what's running on the calculation processing engines. You define how those studies are created using Wizard Lab. And Wizard Lab is kind of the way to express to the engine what you want it to do. It's designed using a canvas. It's a drag and drop interface and meant to be almost kind of like flow charting. You're always taking data, source data such as OHLCs, and you're defining the data flow. It's always a series of transformations, and that's kind of a technical way to put it, but just like when I look at a chart, if I look at a study such as RSI, which is a relative strength index, it's a very basic technical analysis oscillator that attempts to identify overbought and oversold conditions. What happens is, as data flows through the servers, tick data builds OHLCs, and those OHLCs create these charts. The values of the RSI are a derivative of the price data. So in other words, without this price data, I have no RSIs. And as the price data comes in, it updates the RSI values. This RSI can only be calculated based on the price data. As such, in order to operate with this in a calculator, like let's say you had a spreadsheet. If you had a spreadsheet and you wanted to calculate RSI values, you couldn't calculate those RSI values without the price points. You would need those price values first, and then you would take those price values and you would calculate the RSI values. The chart does the same thing. It takes these price values and it calculates the RSI values. In other words, a computer program does the same thing. It takes an input. It converts this input and it sends it as output into the input of another study, another function, and it calculates the RSI values. And you have a flow So just to illustrate what I'm showing here with the RSI values, I can pick an RSI study and I can flow the OHLC values as the input of the RSI study. I'm flowing OHLCs into the RSI and it's creating RSI values. And you can join these together in any configuration. That's what Wizard Lab Rule Builder is. You save this rule, you build a strategy, and you publish this on the server. Well, historically, we focused on the automated trading component. And the reason for that is because that is the technologically difficult thing to do, to have a completely fully automated system that you can control using simple drag and drop. When that system was designed, the natural extension is to present your signals without robotically trading. Right? So Prodigio allows you to fully and robotically trade your strategies using your risk parameters, using your portfolio, and using a system of tools that gives you rapid trading functionality. I just liquidated 2 positions at market. Very easy to do. The TradeOptics is an extension of that system. And what it allows you to do is publish strategies that you have developed or use this suite of out-of-the-box strategies that are offered immediately with the platform. And when I check these off, it publishes them into the server. This becomes a trade scan alerts view. In other words, instead of robotically trading those signals, it's going to send you the signal and let you decide whether or not you want to trade it. Now, there's pros and cons to this approach. The con is that if you develop a sufficiently intelligent strategy, you have the delay of sending the signal to you, the human trader, and then you have to think about that trade. And you probably want to load a chart, and you probably want to look at it and think about it. And that takes time. You know, even if you are an extremely fast thinker and you can make decisions at these kind of, athlete levels. Athletes, when they're in the zone, they're on another level of thought. And the baseball player can swing the bat and he can hit a 90-mile-an-hour fastball, and he's kind of on a different level of thought. Even if you have that about you for your trading, there's still an amount of time involved because you've got to apply that thinking, and those milliseconds, depending on your strategy, can mean the difference in a couple pennies, and that penny can make the difference in, say, a commission, etc. It's just a different style. And the other thing is that the automated trading system can put on many more positions at the same time than a human trader can. However, the pros of one methodology are the cons of the other. And the big advantage to TradeOptics, and I promote this a lot because it allows you to kind of dip your toe into the water for trading system automation, especially if you're new to technical analysis. And you can look at the results and you can learn, you can train yourself, but you can also make managerial decisions about the trading. All right, so here's a long on Google. And I haven't looked at Google in a while, but it's back up to a very healthy $580 a share. Right? And so by seeing the signal come into the TradeOptics queue, I can look at this and I can say, I like this, I don't like this. I want to pass on it, or maybe I want to think about this. Maybe I want to save this in my mind, and I'm going to wait on this signal. If this perhaps crosses, if I put the Shadow Trader pivot points back up on here, if this gets maybe halfway back to the pivot point, maybe I do want to ride the wave and go long, because maybe if my market indices become extremely bullish, right? So right now they're generally a little bit choppy. I think it was more defined in direction earlier on in the day. It's a little bit more choppy today, but those kinds of decisions I can make by looking at the tools at a glance in Prodigio. So with TradeOptics, this is a form of scanning aggregation. And I bring this up because, our next build that I keep talking about, it really focuses heavily on the scans. And we did a lot of work behind the scenes because we've kind of opened up the client. We've increased the client side's ability to process data by several orders of magnitude. And so we have a couple other significant features that provide you more at-a-glance information. The TradeOptics sends you the signals in real time, and you can look at all of this at-a-glance information, combine that with your scanning aggregates, and make rapid decisions in a semi-automated fashion. So you can use this as a robotic system. You can use it as a scanning and idea generation system. And our focus is on providing the agility to make rapid, on-your-feet decisions should you decide to trade in that manner. Now, of course, I always allude to this system was built for every trader. It was built with all traders in mind. And if you're managing a portfolio, you are going to be holding positions, for at least several days. And sometimes you're going to be holding position for months at a time, sometimes even years at a time. If you are shifting positions around, you want to pick good price points for yourselves. And the price movements change all the time. So even on our good friend Apple here, if I knew that I wanted to sell some shares of Apple, and let's say I missed this down move, right? Let's say it was 11 o'clock and I said, oh darn, I knew I wanted to sell. I should have sold earlier, but I kind of missed it. What I can do is I can watch the price climb back up, and these patterns continue. There's waves in the market. There's shifts in momentum between the bulls and the bears, and it's a naturally occurring phenomenon. And if I am scanning and I'm waiting for this to get, say, halfway back to my pivot point, I might be pleasantly surprised 40 minutes later, right before I'm about to go to lunch, and I say, hey, price came back up. And I can watch it for a little while, and maybe I get excited because I see the trend start to reverse again, and I liquidate here. And I have optimized the movement of my positions in my portfolio, because even if I take the low, I sold here at 396.65 instead of almost $3 lower. $3.96 to $3.93. That's about $3. Maybe $2.50 actually. But that's $2.50 per share. And all I need to do is just have a good understanding of the market. I need tools to be able to look at all of this information at the same time. And as long as I have all of that, I can immediately start shaving the profits and the losses in my favor a little bit. And that could mean all the difference between your profitable and non-profitable trading. So the TradeOptics is a powerful scanning tool, and you can use technical analysis to create rules like that versus the pivots, and you can give yourself signals so that as they come in, I can be alerted to when certain significant events happen with respect to the pivots. And the new builds which feature the scanning systems, they tie this in. They tie everything in so that you can be watching TradeOptics and taking a look at the different scanning views. These new TradeVision tabs, you can always undock these, by the way. So if I select the advanced layout, I can always undock TradeVision. Right here, I'm just right-clicking and I'm saying select floating. Right, so TradeVision here, I'm floating out here. I could put this on a third monitor, by the way. And I know a lot of you guys know this and you do this already, but I always want to make sure that as people come in, they know they can do this, because if you have a multi-monitor setup, that's the whole point of this. You can have more than one scan running in the new build. We actually have 3 scans tabs that come out of the box. We're going to expand that even more, but we're already coming out of the box so that you'd be able to have on 3 different monitors 3 different scans. And these scans, you can float, you can dock them back in, but you could be watching the scans on a different monitor and watching TradeOptics come in. You could put the TradeOptics on another window. You could float this as well. And what happens is when I load, say, one of these symbols, I can be watching my chart on my one monitor and my TradeOptics on another. So this is why it's an extremely powerful system. It's designed for traders, especially if you are a day trader. We took all of the features that we knew a day trader would need in order to make rapid decisions, and we put it together in such a way that even if you're just a swing-based trader, well, I say just, I don't mean that condescendingly at all. I mean, if you trade using a swing-based strategy, or if you are a positions-based strategy, or a hedge fund manager, etc., you have all of the tools available that day traders have in front of you. And of course, you've always got the Thinkorswim platform. You know, these platforms are tied in together. But hopefully today I have presented to you how you can leverage the scanning features of our server-side scanning systems by using Wizard Lab, and we'll be talking about Wizard Lab more in the next couple chats. You can check out our video archives, especially last week where I talked about how you can manipulate some Bollinger Bands to find some very effective signals. Remember, you always want to look at several things, and in my opinion, you don't want to look at too many things. You want to be very intelligent about how you create automated systems. You know, don't look at 100 different technical analysis studies. It's probably much more valuable to be looking at maybe a max of 15 max. You know, but you can find significant advice from just the technical analysis by looking at as little as 2 or 3 even. Again, it's all dependent on your personal knowledge of technical analysis, but the system presents all of this in a way that you can build these strategies, deploy them, aggregate the signals, and rapidly react to it using trading tools. Our next build enhances that, and there's several long-awaited features that we're working on delivering, and so I don't want to talk too much about that today. As we get closer to the release, which is hopefully sometime next month, we'll talk about them in more detail, and we'll have a chat where we kind of showcase a lot of these features. So you can look forward to that, but if you don't have Prodigio, get started right away and request activation from support@thinkorswim.com. Put in there in your subject line, Prodigio activation, give them your username, and they'll get you hooked up right away. So I'm going to conclude this chat today by saying, remember, trading it's all about your approach. It's all about your approach, and you should not try to create some kind of mythical holy grail formula which is always going to work 100% of the time. Trade automation requires you to know what you're doing and to harness the power of that system to effectivate what you want to do. And as long as that's your approach and you use your reason and you use your education, you have the potential to create very powerful systems, be they fully automated or semi-automated. And these tools augment your own ability to be a great trader. And so what you need to do is quite simply learn how to use some of these, even the very simple features, such as creating a Wizard Lab rule and running it in TradeOptics, which is very easy to do. But once you get your foot in the door, you'll begin seeing how simple it is to expand on your own ideas, and you can start manipulating the signals to your will. And you will find opportunities in the market which present themselves to you, and you can use your own trading intelligence to make the decisions based on those automated signals. And so I hope you take that to heart, and I hope you join me again next week for our next chat. We'll get that out there on Twitter, what the subject of next week's chat is. But apart from that, from the sunny city of Philadelphia, Pennsylvania, my name is Brian Wagner, and I'm the Chief Architect of Prodigio RTS. I'll sign off for this week. I want to thank everybody for joining me today, and we'll be hard at work over here working on some more trade automation features. I hope you join me again next week for next week's chat, and as always, great trading everyone, and take care.